Welcome, everybody. Greetings, agents of impact, as we say every morning in the brief. It's great to see so many human agents of impact. I think I see some AI agents as well, and we welcome them as well. We need all the agents of impact we can get. Um, as always, as Zilna said, so many such talent among you all. So go ahead and start introducing yourself on the chat. Say who you are, where you're coming from, and maybe something about how you're shaping the algorithm in your work. I want to give a big thanks to Katy and the Siegel Family Endowment right at the start here for its support in kicking off with this call, our Shaping the Algorithm beat. And Katy, will bring you up in a second to thank you in person. But first, let me also bring in Dennis Price, CEO of Impact Alpha, who's been working this beat with me as well, and all of us. Dennis, as folks are increasingly well aware, this topic and this beat is exploding in front of our eyes. It felt like this month something happened. Everybody woke up to just what a disruption we're in. We know folks on the call and out in the world are in different stages of kind of preparation and knowledge. And we'll try to speak simply and break it down. And that there are a lot of debates sort of at all levels, including existential ones. It's been at least somewhat grounding to me to dig into what we can actually do and build. How do you see it?
I think that's right, David. Our goal is to get practical and pragmatic about where, for example, where impact investors can play a role. What are the levers? What are the players? Who are the players? Where are the investable opportunities? And I think, as we'll learn on the call and from the guest today, there is a lot of activity going on and ecosystems underway, but an opportunity to do a whole lot more. So we think this call is timely, kicking off the beat is timely, and the partnership with Siegel extremely timely, and we're thrilled to kick it off.
Well, great. And hello, Katy.
Hey,
Welcome.
thank you.
And thank you. And one of the things I was going to say people can do is go to LinkedIn. Isaac, can you put the link in where Siegel announced our the kickoff of this beat today, and everybody can like that LinkedIn post and repost it and comment and whatnot. But welcome, Katy. Dennis mentioned pragmatic, and you had a post in Impact Alpha talking about the sort of middle way between the doomers on the one hand and the utopians on the other in a way, and sort of, you called it techno-pragmatism. Um,
Yeah.
tell us about techno-pragmatism.
Yeah, it's funny. I think AI is a great, use case for techno-pragmatism, but really the notion of being pragmatic about technology adoption has been part of our organization's DNA from the very beginning, and part of why I'm in this work in the first place is that, I don't come from a technical background. I didn't study computer science in undergrad. I'm a humanities student, but I've been technically adjacent for so long. But I think I've developed a sense making skill around technology that stands out in a world where we do find two extremes in terms of people saying, look, technology will solve everything. Just let it rock. And people who say, no, I'm a Luddite. I don't want to adopt anything new. And like, I'll give up my BlackBerry kicking and screaming. I think there's opportunity always for technology to enhance and improve people's lives, but that doesn't mean it's always the solution. That doesn't mean it's always the first place we go. And that doesn't mean that every technology by design is inherently good and perfect. I think technologists are building incredible tools, and we have to be smart about how we use them.
We're going to get into a lot of what Siegel has been up to in this, but just broadly, we set the call up with a post the other day, and you laid out a kind of choice we have in AI in particular about what kind of AI we're building. Just kind of lay out the stakes.
Look, AI systems, AI platforms, the different tools that are being built with AI are exciting. They are changing a lot of what I think your average person sees as possible with technology. This is a development that's been happening across decades. Our chairman worked on AI doing his PhD in the 1980s at MIT. So it's not that this is astounding and new and we just woke up to it when ChatGPT launched, right? There's a lot of there, but there's also so much that is junk that we're getting in the form of marketing briefs and press releases that are wanting to wow us. And I think we can build the sort of systems that are designed to improve lives, to solve problems that actually exist, but only if we're taking that perspective from the outset. If we're building things just for the sake of building them, just because you can doesn't mean you should, right? You have to be thinking, what is this actually going to do? What does it solve? How is it benefiting humanity? And I think those are the big questions that should underlie good AI, the type of AI we want to build.
Terrific, terrific. Well, we're so delighted and excited to be working with you guys on this beat and charting out that narrative, that techno pragmatist narrative around AI. So thank you. Stick around, Katy, for just a second. Let's introduce everybody else. Mohamed Nanabhay from Mozilla Ventures. I think you're coming to us from Delhi. You've been at the AI Impact Summit there. Welcome.
Thank you, David. Yeah, it's almost midnight in Delhi, but the energy is palpable. Everybody's still out, invited to 5 dinners at a time, launch events going on. This week has been quite chaotic in Delhi, full of energy. There's over 100,000 people that have descended into India for this event, following up from the Paris event previously. And what's really interesting about it is you've got this optimism and hope, and people from frontier labs, from government, from civil society, thinking about AI. But there's also a palpable sense of fear in the air as people think about some of the risks, think about job losses that are oncoming. So it's kind of a tale of two AIs that people are grappling with over this week. But we've been pleased to be here and dig into some of those conversations.
Thank you. Well, we want to hear more about that. It's kind of a microcosm, I think, as we were saying, of the sort of dichotomy that a lot of people are feeling. Thank you. And Paul Fehlinger, Project Liberty Institute. Welcome, Paul.
Thank you, David.
From Paris, I believe.
Exactly.
And Project Liberty has been leaning into this whole world too of sort of public interest and open source AI, and we're going to hear a lot more about that, Paul. So thank you. And Chris Jurgens from Omidyar Network, an old friend and a responsible tech, now responsible AI veteran. Hi, Chris.
Hey, David. Great to be back with you.
Thank you so much for joining, Chris. Why don't we start with you? And again, lay out what you think. Sort of the stakes here or the moment that we're in terms of the opportunity to kind of, shape the narrative or shape the algorithm. Like what's the work to be done here, just at the broad level?
Look, we're a philanthropy focused on how do we shape AI to benefit humanity, and how do we have stronger societal governance of AI to decide what we want it to do and what we don't want it to do. And we think responsible investing, corporate governance, impact investing around AI is a core part of steering AI in the direction we want. I don't think I need to convince many people as to the stakes, but I just point to four kind of trends. Magnitude of capital deployment, 660 billion just from the big five hyperscalers this year in AI infrastructure. Pace of technological advancement, the frontier models doubling in the duration and complexity of tasks they can take on every 7 months, a kind of new Moore's law. The rate of both consumer and enterprise adoption, fastest scaling consumer technology in history, 80% of businesses already using AI in at least one business function. And then starting to see the real world impacts, right? Impact on energy prices. Data centers already consuming 4% of US electricity, going up to 8 to 12% in the next few years. Early signals on data around on worker impacts, early career, we're only at the start of that journey. But this is a technology that's impacting all industries, all business models, all use cases. So where do you start as an investor, right? With a problem, an opportunity, and a set of risks this complex. We think it starts with AI governance, that you need to treat AI is a core corporate governance issue for AI companies, for deploying companies, for big corporates, for small startups. And so a core pillar we're starting from is like, how do we make core responsible AI, a core responsible investing and corporate governance issue, and then how do we work with investors and players in the impact invest alpha audience to build that infrastructure for action. So we're funding the research that shows the evidence base of the financial materiality of AI risks and why you need to address AI risks to support value creation and avoid harm. We're working with partners to build some of the frameworks investors need to assess AI. So like a TCFD-like framework for risk management and disclosures where investors and companies can work together in a shared framework to diagnose the most material AI risks, disclose them, and talk about how they're addressing them going forward. And then, like, how do we build the community of investors that are going to lead the way on this? We're directly engaging with pension funds, endowments, family offices, and working with a lot of partners like RFK Compass and Intentional Endowments Networks and ICCR that are bringing together investors. And we think there's a really strong cohort of investors now that are ready to lead on this. And then, like, how do we build bridges across sectors? There's a really robust responsible AI community and really robust responsible investing community, but they're not talking to each other enough. So one thing we're launching later this year is a investor AI resource hub that'll be like a clearinghouse for resources for investors in responsible AI and a place where we can bring AI experts from the technical community across to translate what they know to investors. So we think it's important for impact investors, for mainstream investors. It starts with governance, and there's a lot more to do.
Just sort of trace the logic here. So the idea is that get investors, institutional investors, universal owners, impact investors, others, to be saying that there's a demand for a kind of responsible AI, and that will then create a market response of both startups, but also the bigger companies, and kind of governance getting built in from the ground up. Like, how does the investor influence play out across the ecosystem?
Well, I think it starts with asset owners setting the demand signal that yes, they want to pursue AI to maximize portfolio returns, but that they need strong AI governance and risk management to mitigate the harms. And so we're starting to see some encouraging leadership from asset owners. Folks like Norges and Railpen have put out very public statements of like, these are our expectations around AI governance, and then engaging companies to say, how are you living up to these expectations? Manulife, the Canadian investor, is engaging all of their private equity fund managers and starting to kind of benchmark their performance on AI governance maturity. CalSTRS is one, but many other investors are taking the AI prism on their existing responsible investing issues. For CalSTRS, it's climate, net zero, and workforce and communities, and saying, what does AI mean for fund manager or company's commitments around those issues? And so we think that's starting to show up. We convened just a couple of weeks ago a table of 15 corporate leaders that are kind of the ESG or responsible investing leads on the corporate side. And one comment from his Chatham House rules, but a ESG lead at a big non-AI tech company, said in 2024, AI was coming up as a stewardship issue, but like as one question in their 30-question questionnaire. But by 2025, it was the center of every conversation. So like real sign there that like it's moving, but it is still early days. And so I think the things that need to happen further on asset owner mobilization for it then to flow down the chain, as you say, David, from asset owners to asset managers to companies, both public companies and VC backed. We need to move from just engaging the AI companies around AI to companies across the economy that are deploying it. It's still much more heavily focused on AI companies than the deployers, and that's the next frontier. Second, we need to see more analysis of like the most material opportunities and risks at a very industry and subsector specific level, so that we're really focusing on what matters most for a financial services company, a healthcare company, a retail company using AI in workforce management, and get much more sector specific in the engagement.
Where are the
And then I
oh,
think we need to build it out for VC. And I think Paul will speak more to what's going on the V side of the market.
well, that's what I was going to go there. So, what are the gaps? And if you would like to share a little bit about what Omidyar itself is up to, I'm teeing you up here for Project Alexandria. If you're willing to share more about what you think the opportunity there is, but for a fund or fund managers to find companies and other managers, I suppose, to push this forward at the VC level.
Yeah, maybe a few thoughts on the gaps we're seeing and how we're trying to fill them and what we think other folks in this community can be doing. First, we start with the need to invest in the core AI stack to make the core AI stack itself safe, secure, unbiased, and aligned to the outcomes we want for humanity. And if we don't have that core AI stack safe and secure, then all the things we want to do for AI for good on top of it, aren't going to work. We're going to lead to harms. And so our direct investing thesis has been around, first we invested in Anthropic as the major LLM company that has the highest commitment to safety and ethics. We invested in Grok with a K, not with a Q, a chip company that produces GPUs that use an order of magnitude less energy than alternatives as another piece of the AI stack where we saw a positive impact thesis. And then this new venture, our CEO, Mike Kubzansky, is launching is going to create a vehicle to invest in AI safety and assurance companies and startups. The kind of seatbelts, airbags, and catalytic converters as to cars, like we need that for the AI stack itself. So solutions around algorithmic auditing or deepfake detection and other forms of fraud detection, all the kind of safety infrastructure we need around it. And we'd posit to this group that we need to treat that as like an impact vertical, just as we would look at applications in health or climate or ag as impact verticals, because that's the underlying infrastructure that we need for all of this to be successful. So that's a gap and opportunity for this group to focus on. And then I think how do we build on that for the positive use cases? And then how do we really focus in on some of the high risk use cases? So defense and dual use of AI in workforce and hiring, AI in kids, data center impacts on energy. And I think across this group, I think there's an opportunity to focus in on which of those issues and risks are most aligned with each of your portfolios, and then how do you have constructive engagement on the risk mitigation side around those high risk.
Just to take one of those, and I know Omidyar and Ford and Nathan Cummings a couple years ago did get a small stake in Anthropic in one of those rounds, and that was an attempt that we wrote. I think the headline was get a seat at the table and at least have somebody to call at Anthropic. And Mike Kubzansky, head of Omidyar Network, said at the time, we want to make sure that workers have a seat at the table as AI is deployed. How has that Anthropic engagement gone? And I guess that kicked off in some sense, this invest in AI thesis there. I presume the valuation has gone up since then, so that's a good thing. But
it certainly has, and I think we've had very good experience in direct engagement with the company, and then being able to bring the company in relationship with some of our partners in the civil society ecosystem. And I think what's most encouraging from Anthropic is the degree of transparency in their stances and their model cards, and then in putting things like the Anthropic Economic Index out there on like how their user base is using AI, including workers, right? How is this showing up in terms of how workers are using it and what that suggests around the whole automation versus augmentation debate around AI and the workforce. And so that's something we think we need across the board is much more transparency from the big guys to the little guys on how AI is being used, what are the impacts, and then how do we address them.
Okay, well, we'll be watching that closely. And Anthropic, as everybody knows, is in the sort of headlines recently in an interesting one of the many interesting debates underway. But Chris, stick around. But let's jump and bring in Mohamed again from Delhi. And Mohamed, just to pick up on what Chris is saying in terms of the opportunity, you're a fund manager effectively that investing in AI companies with a specific responsible and sort of pro-social bent, and I guess you're seeing a lot of that in Delhi there. But just give us again the landscape of sort of what that startup world looks like in this context.
Yeah, absolutely. So, we've been investing along a trustworthy AI thesis for 3 years now. We initially at our foundation, we'd done some work a number of years ago in 2020, where we put out a paper towards trustworthy AI. And as we were thinking about these issues and seeing some of the developments on the horizon, we started thinking about what are the elements that are needed to drive trust in the AI ecosystem. So issues around privacy, fairness, trust, safety, transparency, and open source. And as we started thinking about those from a perspective of civil society and as technologists, we started asking ourselves, what else do we need in the ecosystem and how do we support it? So of course, as Mozilla Foundation could do grants and fund research into this work, and our corporation could build products and technology in line with these principles. Over 3 years ago, we said, what other tools do we need? And we realized back then that venture capital was one that could play an important role in helping to catalyze this ecosystem of people who wanted to build responsible technology, who wanted to build more trustworthy AI. And we're looking for a partner who could help catalyze them and who had some experience in the field. Of course, for 25 years, Mozilla has been building very publicly as an open source company, a company committed to open standards, committed to privacy of its users and sort of putting its user base first rather than seeking profit at all cost. So we had this idea of this fund. We stood up a $35 million fund. And we had a very simple thesis. Let's take the principles we cared about. Let's find entrepreneurs and founders who are building in those sectors. And let's go out and support them at the earlier stages of their businesses. And realizing as technologists that we don't have all the answers, but we have interesting questions. And we wanted to find the people who cared about those questions and we're going to explore them in a manner that would drive the field forward. So today, we've made over 50 investments. Like Chris, sort of articulated, very much up and down the stack. One of the founders in our portfolio here in Delhi, Krishna Gad, who runs a company called Fiddler AI, one of the leading AI governance and observability platforms, said to me, trust can't be something that we document in a PDF document. It's not a tick box exercise. It's something we need to encode at our runtime. And the technologists in the core will know that means, it's at every step of the technical process, as our code unfolds. And that's really retrospectively a great way that we describe our portfolio. Because we've invested in companies at every stack of the AI layer, from the governance companies, people like Credo AI, Holistic AI, who are sort of leaders in AI governance, from the US to Germany to the UK, who are building out these tools that help Fortune 500 companies, that help startups think about AI governance. We're investing in people building the core privacy infrastructure so we can train on AI data in a way that's privacy preserving. We've got founders, in Africa who are thinking about how do we build models that focus on underrepresented languages so we can encode values and cultures from different parts of the world. So we've really got this great spread of founders now who've been attacking this problem. So we've learned a lot over these 3 years of how do we identify founders who are value-driven, who care about this mission, and can we go out and support them and back them with venture capital as they start this company building journey. And what does it take at each step of the capital raising environment? Because obviously as companies scale, there's different levers of influence you have as larger investors come in and they have different things that are pulling them. And what we've found as Mozilla is, we've become that voice that they can pick up and call and say, we're really dealing with this delicate problem. We're thinking about data in this way. We're thinking about our users. We're getting pressure from the market. We're getting pressure from other investors on our cap table. How do we deal with this? You might have gone through this, or if somebody in your network's gone through this. Or can you connect us with the right policy people in your network who can help us as we go out and build this? So it's been really exciting working with these founders who are tackling these problems. But the one thing that I'd add, as we think about this thesis, as we're 3 years into our first fund and thinking about funds beyond this, is we started looking at governance, we started looking at trust. This was prior to ChatGPT being launched, which is why we've got this amazing cohort of governance companies, because of course that was the thing we cared about before ChatGPT launched. But now we're at this moment where we see the risks with AI, but we also see the opportunities that AI brings. And I think that's really exciting as well. And I think it speaks to what Katy sort of articulated as well, in the pragmatism of this. And I think investing at that intersection as well becomes really interesting and exciting for us as well.
Mohamed, say just a bit more about, you talked about sort of investing in companies that are mitigating some of those risks, but also some of the opportunities you're now seeing. Talk about the business case for some of those theses, because presumably those are companies that consumers are going to trust and enterprises are going to trust and rely on. So just talk a bit about what you've learned about the business case of investing in these various parts of the stack.
Yeah, absolutely. So what often what happens, and what we're finding with these companies, especially at the early stage, they've got an idea of the research and the problem they're attacking. And as they go out and do customer discovery, you end up finding a solution that might not have been exactly the thing you were trying to solve in the start, but it's directional. And it's important to give those entrepreneurs a place to experiment and build. So, we've got a great company in our portfolio called Trupic. And Trupic builds authentication technology for media. So, we're in a world of deep fakes. We don't know what we can trust. We don't know if the images coming out are real or not. I think everybody knows this problem. Trupic started building an industry-led solution to this problem, where they'd be able to authenticate something that came out of a camera as being true. It's in the company's name. And as they develop this technology, really thinking about, this could be a solution for media companies. So the BBC or Sony, would use this in there. They stumble upon different use cases. So, it turns out that many large businesses, from insurance providers and so on, need to know that a photo coming out of a camera is true. So there's not fraudulent activity taking place as everything becomes mobile and self-reported. This turns out to be a huge business, solving a real customer need. We've invested in a company called Musubi AI. They're building, sort of using AI tooling to think about trust and safety. The founders have come out of the dating industry, where this is a real problem, where you've got stalkers on dating platforms, you've got bad actors, you've got all these types of activity happening, and it mirrors what we see on other social networks and other platforms. And on the other end of this problem, you've got content moderators. And if you've read some of the reporting that's come out on content moderation, and sort of the extreme violence and extreme types of content that humans are exposed to in trying to, look at what's coming out on social networks, whether it's, graphic content or child abuse and so on, it's traumatic for the person, labor on the other end. They're using AI to help solve this, and, being able to provide better security and safety outcomes for the industry. So, real business cases, solving real hard problems, using AI to do that.
Mohamed, are the companies that you're finding having any trouble raising money on this responsible AI thesis? Or is there a capital gap there? And then secondly, are there other countervailing commercial pressures, as you mentioned, in later rounds as they raise more, that might distract them or take them off mission? Are there those kind of pressures that you're worried about as well?
Yeah, so on the capital raising front, it's interesting, and we've got this market where on the one hand, it seems really easy for some people to raise a huge amount of capital very quickly. If you're building a model, or you've become a frontier lab, and you're building specific types of AI, capital raising is really easy. For everybody on the other side of the market, it's much harder. And we've ended up with this market where there were companies that perhaps would have raised money quite easily 3 years ago or 5 years ago because it hit the metrics we all thought was standard, now just look meh to a bunch of investors because we were expecting this kind of growth that's at a scale and pace that's unprecedented. These might still be healthy businesses, driving real revenue, real ARR, building real products. So there is a gap. So those companies need to be more judicious with their funding, make it last a bit longer, to find the right investor. We're obviously operating at the earlier stages of company building. I think there's a gap when it comes a bit later on, and companies have to prove much more than they would have to have proved in previous years. And lots of this capital is just getting sucked up by these hyperscalers and by these late stage companies. And I think we're really living in this weird part of the market where these companies shouldn't be private, right? When we think of companies like Anthropic or OpenAI, these are companies that would have been public at any other time in our capital markets, but they've all stayed private, and not just the AI companies like Stripe and so on. And it sucks up. So all the numbers we talk about in venture capital are also a bit lopsided as well, because we're accounting for these companies that are really public company scale in the market. So certainly a capital gap. To your second question around companies going off mission, that's one that we've been sort of thinking about since we set up this fund. We call ourselves an impact venture fund. We care about mission. We invest in mission-driven founders. We've not seen that yet. So we've had a couple of companies in our portfolio where perhaps they've sort of strayed from the initial idea that they had because, the early stage, they have to find product market fit. We call some of them, move into a different type of mission fit for us. Some of them, we call them benign. So they start building a technology that perhaps not driving the principles forward, but are not harmful. We've not yet had a company that's done some harm. We monitor our portfolio. We speak to our founders regularly to try to head that off. We built in some governance for our side letters and so on, where we have to have a conversation if that's going to happen. But yeah, a real risk on the horizon as these companies pivot and move.
Thanks, Mohamed. Stick around for a bit. I want to bring in Paul. Paul, a few months ago, you wrote a piece in Impact Alpha, sort of laying out the investing with AI and investing in AI framework that we found extremely helpful here at Impact Alpha. Can you sort of lay that out and why it's important to make that distinction?
Yeah, and I think I want to start with congratulating you on launching this new beat because I think it's really needed. Investors are quite confused because on the one hand, there's this AI hype, right? Half of venture this year or last year was poured into AI. And at the same time, the technology is changing all the time, and we're just starting to understand sort of the impacts of this. And then, so whether you are an LP, whether you're a GP, you sort of wonder how you update your processes, your mindset, your investment thesis, but also your risk and governance frameworks, right? And so at Project Liberty Institute, we're quite fortunate because for the past 2 years, we've been speaking with hundreds of LPs and VCs across Europe, across North America, increasingly also in Southeast Asia and places like Japan and Singapore and other geographies. And one thing to acknowledge is that everybody is early and no one is really an expert on those questions just yet because the technology is so new. So from this work that we do in partnership with organizations such as Omidyar Network, Reframe Venture, Impact VC, the United Nations, and many others, something became quite clear is that there's a bit of confusion between two things. One is the need to update risk and governance for the age of AI, and the other one is this question, So how do we invest in good AI, and what is good AI? So on this risk and governance question of what is responsible AI, everybody on this call, on this virtual meeting, will have to deal with those questions. So in the same way that capital allocators, asset owners do have procedures for sustainability or other areas, AI is, as a common purpose technology, as an infrastructure, something where there is great risk and you need to adapt your frameworks for this. But that is not necessarily impactful investment in AI or good investment in AI, right? This is just something that all investors need to do to protect their investments and their portfolios. And here, together with Reframe Venture and Impact VC, for instance, a resource that might be interesting for someone on the call, we launched in December the first toolkit for venture capital investors on due diligence for AI. So this is very important. But then there's this question of, so as an impact conscious, as a systemic investor, how do you think about AI? And very often when you mention the word AI, right, and you all had those conversations, the first reaction is, oh, AI, this is fantastic. I'm at my fund. I use a lot of AI technologies for better portfolio management and deal flow. So AI is great. Can we please talk about AI? So I see nodding. Everybody has had those conversations. But that is not sort of what I think we want to talk about here on the call. And then there's this second thing, which is impact investment with AI. So AI is an infrastructure as much as cloud computing is an infrastructure in the digital technology space. So, of course, whatever your impact thesis is, your systemic investment thesis is today, whether you invest in agriculture sustainability or in social housing or whatever it is, AI is an accelerant of your investment thesis, right? So everybody should lean into this, experiment with this, but that is not necessarily impact investment in AI. Impact investment in AI is something that I hope we can unpack more, and also that you will unpack more in your beat, which is this question, how can you invest in good AI? So first of all, what is good AI? And here we start to understand that things like agency over the data, over the systems is really important, whether you're an individual end user, whether you're a corporate user, increasingly in the geopolitical context, even if you're a procurer in a government, those questions become really, really important. And, you know, we start to understand this field, but what I think is also very important is that we understand the stratifications of how to think systemically about AI. So if you want to have impact today in AI, I think there are three areas that we should focus on, that we should discuss, that we should concentrate on. One is the infrastructure layer. Chris mentioned it, Mohamed, you mentioned it as well. AI is so complex. Just have a look at, you know, the notebook, recent experiment. This will not be governed by two-page policies, by spreadsheets, by reporting in Excel sheets. We need technological solutions to ensure agency by design, explainability by design. So there's a lot of need for innovation at the infrastructure level, the protocol level of the AI economy. And then there's a second bucket, which is the application layer. So at the application layer, this goes a lot to what is an investable market. I think Mohamed and Chris, you both spoke to this. What is an investable market? How can you make a lot of money? But also, how can you innovate with better business models that are not only great for profits, but that are also have net positive effects for the societies we live in and the economies we live in. So this is the application layer. So there's the infrastructure layer, the application layer, and then of course there's the assurance layer, because you need the technologies to rein in, to govern, to sort of control AI systems that humans don't understand anymore. So I think this is the kind of discussion that I hope we can have, and that you will also focus on to unpack how the ecosystem is developing on those topics.
I think people are getting, Paul, savvier about, as you say, the kind of stack, as they call it, and it goes all the way down. And Chris mentioned it with the energy consumption of the chips. It goes all the way down to the energy level and the data centers, and then all the way up to the applications. But in between, there's all this plumbing and the real workings, and a lot of time, in a lot of ways, the sort of assumptions and the sort of optimization algorithms, as it were, are getting worked out in that layer. And um, let's let's talk to Katy a little bit about this, because you've been working kind of across the stack as well to try to make sure that there's a voice for different kinds of constituencies. I know there's some questions in the chat, about GPU access for historically Black colleges and universities. I know you had a piece the other day about rural innovation, and so sort of making sure that everybody is being part of this, not just disrupted by it.
Yeah. Well, I mean, I love infrastructure, always have. It's been a focus for us at the foundation for several years, and it matters even more now that we've been arguing for a long time that we need to reimagine how we think about what infrastructure is in an innovation and digitally driven economy. I think it is never clearer than this moment in time that we have to rethink what we mean when we say infrastructure broadly, and what that means both for the field of AI, but also for our society and how people are going to be able to engage with each other in these new tools. I think, and it's interesting seeing the different questions in the chat and the Q&A coming through. I feel like this is a moment of opportunity for us to take a lot of threads that we've been working on in other areas around things like what is a good job, climate, questions about new models of employee ownership or steward ownership for new businesses. Like, we've invested at Siegel, for example, in ICA fund out in Oakland that's been thinking about the question of, like, the tech industry comes to town, what might that mean for a local economy beyond just getting people tech jobs? So, like, they've been exploring different models of ownership and building out new sorts of businesses in that context. We've worked for many years with Just Capital, and we've also invested a lot in the notion of what a good job might be. Our chairman and founder David Siegel was launched an impact fund within his company, Two Sigma, that has since spun out, focused entirely on the notion of good jobs and what they mean. I think, and look, we could use AI to do it, but I think it's time for us to take these threads and really weave them together and think more deeply about the moment of opportunity we have to create a new foundation for sort of what society looks like when it comes to what it means to give people access to opportunity. If we believe that AI is going to be transformational, and I think there's a broader question there about what kinds of AI, and another topic for another day, I think, is the question of whether large language models and transformer based AI is really the question within computer science of whether simply scaling these models or investing in entirely new models, the question of how we combine different forms of artificial intelligence, like, all incredibly relevant to how we think about what this moment means. And to come back to pragmatism, try to get smart about the various levers we can pull. I think others have spoken about the scale of investment in just advancing frontier models and in thinking about how we can compete with what industry is putting into the field. And I'm going to reframe even my own thinking, because it can't be competition. We will lose. The scale of capital is just not there to serve every public good need. So how are we going to be savvy about making something, like making things greater than the sum of their parts, making something out of the work that we've been invested in across the social impact spaces we care about for a long time, with AI and for AI in this moment, not entirely trying to reinvent them because we think we need something to respond to the AI moment.
Yeah, yeah. And I think you're right. And maybe it's not competition, but it is maybe alternative, like to have an infrastructure that is designed and optimizing for you said the other day, an AI economy that reinforces human ingenuity, agency, creativity, and the public good. As if that's the actual, sort of purpose of AI at some level. And how and you know how, what's needed, or what would help unlock that?
Look, I think the first thing is a really big thing to unlock, but the reality is it's about narrative. It's part of why we've invested in this beat. I know that Omidyar is also investing in helping news organizations cover AI and its impact more effectively, right? Like part of it is that we need a mindset shift so that we're thinking more about technology as tools and not as our masters. And I think there's a very strong imperative from big tech to make us believe that the tech itself is the end, that the tech, that we serve the tech and not the other way around. But the reality is that we have both the agency to choose what we adopt and what we don't adopt, and ideally the power in sort of collective action to say, hey, this is what we believe is beneficial and this is what we believe is not worth it, right? I think about a state something that our chairman said a long time ago about sort of the pollution of some facets of the tech industry, right? When you think about social media, and obviously with the trial happening right now around social media harms, it's hard to ignore that there's negative, maybe intended, maybe unintended consequences for these things that we roll out, and the expectation that that everyone being on a platform, everyone using a tool is the ultimate objective. We have to change the notion of what success is from everyone adopts this to this is adopted in a way that is intentional. This is built in a way that makes sense to solve for something, or if this is a general purpose technology, that we have a deeper understanding of what general purpose is and for whom. And I think we get really caught up in wanting new solutions or new technologies to be solutions, but the reality is the problems that we have are so much bigger than any one technology can solve in the social impact space. And we really need to be thinking differently about the way that we experience new tech and how we pick it up and examine it and sort of anthropologically decide that we are going to make something useful for what we need rather than be swept up in what's happening.
Hey, David, can I build on that?
Yeah, absolutely.
Yeah, so Katy used the word agency, which is central to how we think about this as well. And right, there's these two narratives, which is a frame that Katy also used, right? AI is in tech is too complicated. If you're not an expert, you can't opine on what it does and doesn't do. That is wrong. The people are the protagonist. We should be determining through democratic processes in public policy and through within firms with workers engaged in management of what we want the tech to do and what we don't want the tech to do. So this notion of shared agency and how do we bring local communities into conversations about data centers, workers into how it is and isn't deployed in their companies, parents and kids groups on how AI is and isn't used in those contexts. I think we too easily default to the business model, to the narrative coming from industry that, it's scaling the technology wherever and whenever it's profitable. But for a technology as powerful as this, yes, we need to pursue profitable pathways, but we as a society need to decide to instill the guardrails of what we don't want it to do. And I think that takes place in the civil society side of things, in the political process, and in the corporate ecosystem too.
Yeah, yeah. Thank you, Chris, and the themes are coming out clear. Part of it is this notion of building good AI. Not just taking what is coming down. Another is the notion of agency, as you said, and we've been playing with agents of impact, as you see, and we think that's actually kind of resonant to that we can build agents of impact, and that we are agents of impact, obviously, and then narrative, and this notion that there is a through line through this that actually gets us optimizes for the kinds of outcomes that we've all been working for. So we've also been playing with impact in the loop. People think of human in the loop,
Mm-hmm.
but impact in the loop, so that there is the questions are asked at each level, at each design stage, at each investment. We have a
And I
few more
think
minutes.
if I may,
Yeah,
sorry,
please do.
David,
This is the time to
I
jump in
think
here.
there's one sort of dimension that is also very interesting to look at, and that we spend a lot of time on all the other factors that you mentioned to understand what is good AI, how can you invest into it. But we shouldn't forget the market signals. And I think this is really relevant for every investor here in this room. We like to listen a lot to those signals at Project Liberty. So we've done, for instance, when you think about end consumers, we've done a survey across multiple continents on attitudes of users towards how their data is handled by businesses today. Surprised, the majority across geographies is very scared and does not necessarily like what is available in the market right now. I happened to be on a conference earlier this week with a lot of corporates, very large corporates, household names, and the people who procure the AI systems. I can tell you that people are not happy with what they see in the market in terms of agency, in terms of all the values that we just discussed. And anybody who followed the speeches in Davos, who followed the speeches in Munich, and who's on the ground right now this week in Delhi, I think also understands that the shifting geoeconomic landscape is also creating new demands from a variety of governments for more agency, more self-determination for their people, for their companies. So there's a very interesting alignment between the emerging impact field and just pure economic opportunity based on market demands. And I think this is very interesting to really start from this position and not a discussion if this is concessionary investment or not.
And is it out of school to note that some of this is a lot of this is happening outside the U.S. or perhaps in states versus at the federal level? I know obviously you're there in Delhi, Mohamed, and Europe has some regulations. California has some regulations. Where is this pressure market signals going to come from? I think is an interesting question.
Yeah. Well, the way everybody's talking about it here is talking about AI sovereignty and what does sovereignty mean in this context. And one of the most fascinating discussions we've been tracking here as we speak to countries that are middle income, where we're really talking about AI model builders in the US and in China that have the scale and the power right now to build these frontier models. So what happens to the rest of the world? Europe, maybe the UK can claim they built DeepMind, but it's so the Europeans are all thinking about what does it mean sovereignty. Other countries are thinking about the same. One of the things we've been positing is that not every country will be able to build this. No one has the scale and resource. Not everyone has the scale and resources. But what we do have is an ecosystem of people who want to see technology built differently and want choice and want options. And we think that becomes an interesting signal, not just for these nations, but for consumers as well. So having an ecosystem of people who are building open source AI technology and tooling provides one solution to this, where we remove reliance on particular models or particular companies, or having to choose between the US and China. And that way, we can have people in Europe building, people in Africa building, we can have shared expertise. And we think that provides a more robust ecosystem as well. There is more accountability, more auditability in the systems that we build.
Great. I want to bring in I'm going to give you 3 questions that we picked out of the very active chat. You can ponder them, you can answer them specifically, or you can use it as a tee off for your final thoughts, and we'll go around again, and I'd probably go a little bit over the hour, so just stick around if you can. But Robert Levin asked about recommendations for investors, like what can you invest in to hedge both against the job disruption narrative. There's the AI bubble narrative, which if it doesn't come to pass might mean even as he says mass economic displacement. So where can impact capital most effectively reduce harm in the labor market in either instance? Another question from Tibet Sprague, investment in stored ownership. So the whole question of like actual ownership of AI and ownership of AI companies also it goes in as has come up into ownership of companies more broadly. And then finally from Kevin Lambert, for the largest AI providers and platforms, how to move AI training and incentives beyond zero sum and explicitly integrate ecological and social well-being into the model. So the optimizing impact in the loop, perhaps. So those are sort of the, we've worked over some of that ground already, but if you want to pull that into your final comments, and maybe we go the same order we started with: Chris, Mohamed, Paul, and then Katy, you get to take us home.
Great. Thanks, David. So to the question about labor impacts, three things. Like my biggest worry is the quickest path to profits is workforce automation, right? Because it goes straight to the bottom line. But potential the more transformational applications are augmentation. Roy Bahat uses the looms and crane analogies. Looms just replace what a weaver did like for like. A crane allows you to lift a 10-ton steel girder that a human could never do. Getting to those kind of transformative, like empowering workers with another level of capability, it's a more complex operational thing to implement. But impact investors should have the patience and incentive to work on the harder stuff and not just we're going to automate and replace least common denominator, where I think way too much capital is going to go because it's the easiest path, if you will. Second is asking always, whether it's a startup or a deploying company as a corporation, how are you engaging the workforce in the deployment of this technology? We know from all generations of technology, when you engage the workforce and how it's being rolled out in the company, you get better business results. So it's a good business question to ask, and it's a good responsibility and ethics question to ask. And then third, if we get to the most disruptive impacts, investors need to be a constructive voice on public policy solutions around labor force displacement and more creative ways to help people adjust, reskill, have new forms of income, if we get to those higher levels of magnitude impacts. In terms of takeaways from today, like you recapped some of the key themes, David, but I think looking at AI as a governance issue across all of your investments, across all asset classes and companies, considering investing in the AI stack itself with a responsibility lens as an impact vertical, and then looking for those use cases that align up with your other impact priorities and how you integrate AI as a lens into your focus on climate education, workforce, et cetera. And then just an invitation. We're building a community of investors that want to lead on responsible investing. We're building a platform to invest in AI assurance startups, and we're building a network of investors to engage on AI policy in Washington. And if folks are interested in that, we're collaborating with Paul on a lot of the stuff as well. Please get in touch.
Terrific, and we'll be covering that, and we'll also a lot of things have been name checked on the call here. We'll round them up and provide links in the write up on Friday. I think we said Mohamed next, right?
Yeah. So I think the jobs risk is something that's real. It's top of mind for many people. There's a lot of anxiety around it. When you speak to people, everyday people, everybody sits and asks you, what's going to happen to jobs with AI, from all facets of life. So I think we need to acknowledge this risk. We need to acknowledge that we don't have solutions right now. There's a lot of unknowns that we're staring into. And not make false promises to people, but to really be able to talk about this in a rational manner that's free from hype. One of the things that we're interested in as an investor is will AI look at creating new jobs, and what are the types of jobs that might be on the horizon that we probably couldn't have done in the past. Maybe they were sub-economic to do in various industries, but now using this new technology, we can actually create human jobs to do things that perhaps before didn't make sense. And I think that's really exciting because it opens up opportunities for new types of jobs, for people doing types of things that might be more interesting for them as well. And we're starting to see some interesting activity in the market and people thinking about some really wild ideas in doing this. So that's always interesting to us as investors to sort of explore that edge. But yeah, we've been doing this for 3 years. We've got a lot of lessons that we've learned as we go along. I think the biggest, of course, for us is, we just the investor. We're not the heroes of the story. The heroes are our founders. They're the ones who are going out and actually at the front lines, engaging with these topics every day, speaking to customers, speaking to their stakeholders. And we want to put them at the front of everything that we do. So always happy to talk to people about what we've learned, but also connect you to those founders who are really leading this journey on AI governance and building lots of this infrastructure and plumbing we need for a more trustworthy ecosystem.
Great. Well, bring those founders to us as well as those wild ideas, Mohamed and Paul. Some thoughts?
Yeah, well, I second it. At the end of the day, this is about building and creating economic systems that work for investors and companies and users alike. And I also want to second what Chris said. I believe that on those, we need really agile approaches and a lot of dialogue. AI is moving all the time, and LPs and to a certain extent also GPs need to be around those tables when we talk about what is governance of AI and how to deal with those things, especially in venture, because they are just outsized impacts on the type of companies that become mainstream. I like the question about what to invest in. I think, and I wrote an article on this also on your platform a couple of days ago. There's a repricing beyond the hype going on, definitely. I would encourage really, as people develop their systemic investment thesis into the AI field, to really keep in mind the infrastructure level, everything that is agency, safety, interoperability by design in the protocol stack of AI systems, but also the application layer to really think about, can we have high-performing, mainstream, better business models that do not repeat the same mistakes as some of the business models in social media or some of the things that people are really not happy with in cloud markets. Something that signals by default trust and agency to users and also to investors, because it's really difficult to do diligence on every individual portfolio company if they know what they do when they use very sophisticated AI systems. All of this is just going to accelerate with the agentic web. So I think we're at the starting point of what we see, and capital usage and all of that will further accelerate. But I think we're also at the perfect moment to discuss how to build the best possible version of the data and AI economy that we can.
To build. Okay, Katy.
The
Building.
unenviable task of trying to follow all that. Okay, plus one. No, so my three things, sort of in a broad response, in addition to sort of co-signing everything that my fellow panelists have said. One is, I think, around the jobs question. There's also an interesting opportunity to think about investment in the reskilling. We've learned in workforce development that there is not enough capital in the philanthropic sector to support, or government alone, to support even now the level of investment that we need in people who want to gain new skills to get new jobs or have new opportunities. And there have been some interesting innovations. We have funded some of them in the workforce space. Particularly Pursuit is a grantee of ours that's focused on trying to think differently about how you finance workforce training, and invented a jobs bond that in New York State, we've had some traction in trying to get that passed at a higher level to come up with a guarantee fund for that. But I think there's a lot of opportunity for patient capital and for impact capital in that space around jobs as well. The other two things, one is just, I think, open models are something that I think have been at the edges of our conversation, but we haven't talked as much about, and not to make everything about the zero-sum kind of boogeyman of China. I think that's really reductive thinking. But when you look at the way the US is prioritizing, or at the federal level prioritizing a couple of big providers and builders of frontier models over perhaps an ecosystem of open models where we might have more insight into things like ecological impact, into how we wait for climate, into how we think differently about what the impact beyond just what it produces may be. I think open models have a lot to offer there, and that we should be thinking more about how we invest more in that space. And then the last thing, just this has been such an incredible chat, one of the most useful active chats I've seen on a panel. And there's some conversation in the chat about thinking about edge cases. And I think one of the things that strikes me across, having worked at a big tech company and being in this philanthropic space for a decade, is that so much tech is designed for the lowest common denominator and the top of the bell curve, and edge cases are not considered until it's way too late and they're deployed at scale. And then it's like a huge accessibility problem or a huge sort of blind spot that they've had. But when you think about those edge cases from the beginning, when you think about, a self-driving car actually being able to parallel park in New York City, for example, you might design really differently. You might invest really differently. Your foundational capabilities that you're after might look really different. And I think this moment, when more than with any technology I can think of in the recent past, people are aware of something and engaged with something as it is being developed, we have a moment of opportunity to raise the edge cases up in a way that actually will impact how these tools are designed and make space for investment in things that look really different. So I'm excited about that and really excited about all the people who are working on that that seem to be here with us and in this broader community.
Well, this has been such a good conversation. As everybody can see, there is a lot to cover on this beat, but to me, it's actually grounding and somewhat reassuring, because I think sometimes it seems so big, and what we're now finding, all the work that you all are doing and the partners and the ecosystems that you're part of, there is a lot going on at a very distributed level. There's a network being created among companies, among investors, inside companies, I would argue, and engineers and data scientists and others who are embedded sort of throughout the whole AI economy now, and just to sort of to have it sort of yield to the sort of steady work that you all are doing is kind of a way to sort of, I think, push back against the kind of more dire and apocalyptic visions. And so we're going to be kind of trying to stitch this narrative going forward with the help of all of you, and particularly with, as we said, Siegel Family Endowment. So thank you to all our speakers. Thank you to all the folks who joined. We'll have the roundup and a replay of the video in the Friday brief. Thank you to Dennis and to the whole team at Impact Alpha, and we'll see you on the next call and in the brief. Thanks all.
Thanks, everyone.
Thank you.
Bye.
Thanks, everyone.
Bye bye.